All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all back. And I just tweeted out the link to the Morning Edge. I don't ask you guys for much, but if you don't mind tweeting out that link, that'd be great. I haven't tweeted it out in quite some time, but it's good to let traders know that I'm actually back in the saddle, after being off for a few days. So, thank you guys for all retweeting that. I appreciate it. So we're gonna get ready for obviously for today's market. Appreciate that. Let's go over here to our bias chart, and thank you for those retweets. Okay, so let's go into the euro. So the euro has been under pressure, obviously, this morning, and I wanted to sell the euro dollar as we approached 107, and I was thinking that last week, and we got to 106.85, and I didn't short it overnight. I didn't play it to the short side. I still think that we can play it to the short side, but here's the thing about the euro dollar. If you take the longer term viewpoint of the euro, you can see why we're really at key support down here. And let me get rid of some of these fibs, and we're gonna do a little bit of longer term work really quick. Let's get rid of these things. So, okay, you can see. Let me get rid of this fib here. You can see this major support that we're on. I mean, it's huge, like zone, right? We have a low from back in 2015 that came in at 105 and a quarter. We last week we went as low as 105.17. All right, and then we got a decent bounce. Now, if you look at the you look at the candle right now, it's a pretty bearish candle. Obviously, we're near our lows of the session. This is very, wow, look at the dollar yen. Holy crap. Wow. Dollar yen is really recovering here. Oh, it's bonds. This is the bond market. Take a look at the bond market. Just getting smoked right now. That would be the reason why. Hold on. Let me take. I'm gonna go. I'll revisit the yen here in just a second. But look at I'll go revisit the euro in just a second. Here's the dollar yen right up into well, actually probably right into some resistance here. This would be the neckline of the head and shoulder that was developed last night, by the way. See this hourly head and shoulder pattern? So we had head, shoulder, shoulder. We just hit the neckline just now. Okay. Anyway, I'll come back to the dollar yen in a minute. I saw that it was on the move, so I wanted to make sure we took a good look at it. But here's the euro under some pressure after the rejection at as we approached 107. Okay. Now, also, this previous support right here was, I think, the catalyst. Squeeze above there, false breakout, then reversal. Now we're coming in right now. Let's get rid of this. We don't need this now. Okay. Now, if you think about like a pullback that we're seeing right at this moment, we're past the 50% retracement because I was monitoring that a little earlier. 1.8 retracement comes into play right here, and this will probably all be very good support because if you just take your just take a little trend line through here, you'll notice that we have we have a nice spot there, right here, obviously right where we're at right now, right there. That all comes in at 105.80, right? So 105.80, and here we are at 105.83. This should be support. Oops. Put in the wrong spot. Hold on. 0.0580. This should be support. Okay. Now we're there right now. You can see we're here right now. I mean, if you guys are looking for a bounce area in the euro, it's probably going to be right at this point. Now, here's the thing: if it doesn't bounce here, we might actually fill this gap. Okay, you can see this gap. Now, this is some of the data that that it looked like during the Thanksgiving weekend. I have some gaps in data, and I'm not too sure what happened because I didn't have the charts up at that point. Because that looks like it was in the middle of the night on the 24th or 25th, right around the Thanksgiving holiday. Looks like there was some gapping in prices there. But let me go take a look at the euro dollar here. Okay. See, we don't have that gapping here. So anyway, the next support will come in at 105.50. It'll be right down here, 105.51. I'm going to write that down just because we're on the support, so I want to make sure that just in case we break 1.0550, will be the next level support for the euro dollar. Okay. Now resistance. Now you have to think that we've already come up to basically 107 or close to 107, 106.85. This is like a zone. I would call this like a zone, like a sell zone for the euro. I was hoping the euro would get all the way back up to 107, and it still might. I mean, I can't say that it's not going to. It's too early to say, but this whole area, it'd be a sell zone for the euro on any rally. So let's go ahead and mark that up. Preferences, fill. So anywhere from 106.70 to 107, looks like 107, so low there, 107.08. So 107.10. So 106.70, 1.0670 to 1.0710. That's like a full-on sell zone for the euro. Okay, we are still in a very bearish trend. So now from here, unless we're developing some sort of like inverted head and shoulder pattern, which is possible. I mean, it is if you look at like, okay, this is a 4-hour chart. Like imagine, just think about like, elongate this, right? Think about shoulder, head. We might be trying to carve out a shoulder here, but that doesn't mean that that's going to happen. I mean, we may just get up here and reverse and head back down towards lows. But I think that any move back up towards this 106.70 to 107 area is going to be good resistance, regardless if it's a neckline or not. Okay, it's going to be good resistance. So you have to imagine that any rally up there now is going to find some sellers. All right, let's go over to where am I at? The cable. So the pound, man, I'll tell you what, the pound's been just an absolute pig. All right. Now you remember we're still in this well-worn range from last week. I mean, you look at our analysis from last week, because I haven't changed any of this. Let's get rid of this. Okay. Let's get rid of this. Let's pull this over. Okay. You can see the rejections that we've seen here. That nothing's changed at all. Still rejected areas right through here. Okay. Little false breakout, big reversal. God, it was a false breakout overnight, too. And then this is trendline support. So look, I'm not trading the cable right now because I'm having just personally having a tough time trying to put my finger on exactly what it's doing. It makes sense when you look at it, but when it's happening right before your eyes, it's like, okay, do I really want to get long the cable right now? Well, we should have support down here, right through here. Excuse me, I gotta sneeze. I got my allergies picking up today. Stand by. Okay, sorry about that. All right. Okay, so that means down here at 123.75 we should find some support. I'm going to write down 123.75. What's interesting is it's raining here in Phoenix, which doesn't happen all that often. It's raining here. Usually that suppresses my allergies, but yeah, my allergies are bad today. Okay, 123.75, and then any move back up towards 125 is going to be resistance. Period. End of story. So if you guys want to play this range, and we are in a range, remember the cables, unlike the euro, which is extremely bearish, the dollar Swiss that's really bullish, dollar yen that's really bullish. The cable's been kind of sideways recently, and we've realized that the cable's just kind of range bound at this point. But you can see how this range is probably going to be tightening up. So if I had to put my take my best guess at it, we're probably doing this, right? Something like this. Okay, we're tightening into this range. Now I'm getting a little ahead of myself right here, just thinking that that's what's going to happen. But oops. But I think we're range bound for the time being. Okay, now if we start breaking below this 123.60 area, you got to realize that that's going to be a fairly bearish breakdown for the cable. Okay, I don't know if it's going to do it right now, but this support's probably pretty key. Okay, right through here. Okay. So that's the cable, right? Yeah, that's the pound. Let's go over to the Swissy. So here's the Swissy. Swissy was just hitting new highs a bit ago. Now, the Swissy, let's get rid of this. Actually, let's get rid of that. We can get rid of this. Let's get rid of this. If you look at the Swissy is this looks a lot like the dollar index. If you look at the actual Dixie, looks a lot like the dollar index, but the dollar index is actually breaking out. The dollar Swiss isn't. The dollar Swiss is still below some really key, like longer term resistance. I mean, as you can see the dollar Swiss right here. I mean, we really have to scale above like 103 to get very bullish on the Swissy. I mean, I think it's bullish right now. Okay, but I'm also hesitant trying to play it up here. I think that that any move now down to parity is going to be, obviously it's that's more of like a, layup type of trade. If we can get down to here, the question is, are we? Are we going to make it all the way down there? Remember, it is NFP week. We have our jobs report. It's going to be on Friday. We're going to get the ADP, we're going to get ISM manufacturing data ahead of that. There's a couple other reports that are going to be coming out too, that are going to be, I would say, a little more, probably give us a little bit more indication of how to play the dollar, going into Friday. But for right here, it's just like the euro dollar. We might be trying to develop some sort of head and shoulder pattern. If we stop where we're currently at. Now, what I'll do at this point, let's get rid of this because I don't want to put this in your head if it's not there, because it's not there until you break the neckline. Let's look at the 786 as being resistance today. Okay, which will be right here, 101.65. Okay, 101.65. That'll be resistance. Right there. Now support, obviously any dip down to, well, it's 100.80. Okay, that's got to hold for bulls. All right, it is bullish. I picked up a little euro dollar. It's counter trend. I sold a little dollar yen today. It is counter trend. I know that. I'm very, very well aware. I I think if you're out there shorting the dollar, you've got to know that it's a counter trend trade. Okay, let's go take a look at the dollar yen. Now the dollar yen, we have pushed right up to the neckline. This is a, if you notice here, this was a hourly head and shoulder pattern. Shoulder, head, shoulder. Played out last night, right to the below the neckline, right to the breakout point, perfectly. Okay, now that breakout point was huge. I mean, this breakout point right here, you got to go out to the daily chart and realize how big that support was. Oops, I didn't mean to grab the whole line here. Okay, that's 111.50. Now we are over 100 pips off the lows. Okay, we went as low as 100 or 111.35. We've rallied 130 pips off those already. That's pretty massive. I mean, that is massive. All right. Let me double check something. So the high here is 113.87. Okay, let me just make sure I got that same number. Okay, see, my data was off then, so it was actually a little higher. Okay, so we're coming right into trendline resistance. You can see it right over here. Let's do it right here. I mean, we are at trendline resistance right now. Previous support, current resistance. This 112.70 should be resistance right now. I mean, this should be resistance. Now, whether we hold or not is another thing, because we're trading above it right now. And that's a hell of a bounce back. Look at this, 140 pips off the lows. We are 20 pips from the highs. Get out of here. That's crazy. I'm going to assume we turn lower here soon, but let's go ahead and let me check one thing. This market seems like it's in gap fill mode, which gap fill will take us all the way back to gap fill would take us all the way back to 113 and change. So the 618 comes in at 112.90, 112.91. So 112.90. I'm going to write that down. Okay. It's still bullish. Okay, support. Well, support is 111. I mean, it's 111.50, but I know we've been as low as 111.30, whatever the lows are here. 111.35. I'll have to write that down. That's going to be pretty major support. 111.35. That's major support, because if we break through that for whatever reason, that's going to be pretty bearish. Now, I'd be careful chasing the dollar yen up here, and the reason why I say that is because if you look at bonds stop going down, so this dollar yen might be done going higher here at this 112.70. All right, let's go over to the dollar Canadian. Now the dollar Canadian has been, for a dollar pair, has been underperforming. Now if you look at this channel that we had drawn from last week, it's still in play, okay? Now I'm going to delete this one. Let me grab this. Okay. So we have this channel right here. That means any move up to 135 and a quarter is going to be good resistance. All right, let's get rid of this. We don't need this. We don't need that either. We can get rid of this fib too. So this 50% support's pretty important for the market. Right there. All right. So resistance is going to be at 135 and a quarter. Support is at 134.50. If this breaks, here, let's get rid of this. If we break 134.50 here, this should take us to the lower end of that channel again, which would be 133.50 in the event that that happens. Now, that doesn't mean it's going to happen. I'm just saying that if we break through that support, that's what I would be thinking, okay, if we break through the support. So 134.55, 134.55, pretty key support. 135.25 is resistance, which is channel resistance. And we are still bullish. Now, I know if you look at this, you go, what do you mean we're still bullish? This is in a kind of a down channel. But that's on an hourly basis. If you look at the daily charts, as long as we remain above 133, which you guys probably remember me saying that from last week, as long as we remain above 133, it's still bullish. It's just, you know, consolidating in this trend. Okay, but it's just consolidating on this, you know, this last leg higher. But as long as it stays above 133, it's still bullish. Okay. Okay, when I get back, we're going to do the Kiwi, the Aussie, dollar index, peso, Nordic currencies, and we'll continue on with the majors. So thanks everybody for being here. I'll be back in just a few minutes. I'm going to go blow my nose. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar, so I want to welcome you all back. All right, we're going to continue on with our analysis. Let's go take a look at the Kiwi. Now, the Kiwi dollar, if you guys, here, let me delete just these little blue lines from last week, okay? Now, the Kiwi, delete that, delete that. I'm going to delete that. Okay. Now, if you remember the Kiwi dollar, we are really on, you know, channel support, 200-day moving average. We're just, you know, trading around, and bonds are starting to get a little bit of a lift here, just FYI. So we pivoted off of channel support. You can see it right here, right? So there's channel support. Here's your this is your low. We haven't even been able to get up towards the 38% retracement, which comes in at 71.40. Now, if there's a place that I would be interested in selling the Kiwi, it'd be at 71.40. But we haven't even been able to get up there. I mean, it's been a struggle just trying to get any type of lift in the Kiwi dollar. I mean, we're barely able to get past this 24% retracement. One of the things that concerns me about the Kiwi dollar, frankly, is this move right here. That, you know, we posted a false breakout above these highs and then roll right back over. Now, like I said, personally, I would be interested in shorting the Kiwi up here at 71.40. Today, 71 cents has already shown its true colors on being resistance. Hourly support is probably going to be down here. So hourly support's probably going to be about 70 and a quarter, roughly. Okay. 0.7025, resistance at 71 cents. Now, like I said, if we can get past 71 cents, 71.40, I think is going to be key resistance, and that's where ultimately I like to be short the Kiwi dollar. All right. I still think we're in a bearish trend in the Kiwi. Okay. I still think that once we did the whole head and shoulder pattern here, and you have to imagine this is a massive, massive head and shoulder pattern. Okay, you can see it. There's the neckline. It's a big one. Okay, it's a big one. Should we break lower? But we have to hold above 70 cents. I mean, if we break below or 69.50, if we break below 69.50, the Kiwi is, you can stick a fork in it. I'd rather be a seller up here at 71.40, looking for a move below 69.50 eventually. Right? There's nothing to do with for me. There's nothing to do in the Kiwi right now. I would like to be a seller up here. Not at current levels. I don't think I'd like to be a buyer because of the longer term setup in the Kiwi. So personally, I just want to be a seller up here if we can get it. Will we be able to get it? I don't know. It's questionable. All right, let's go take a look at the Aussie. Aussie's also bearish. All right. Now the Aussie. Let's go out to the daily chart. False breakout above the highs, false breakout above that triangle, and a reversal. It was a mega reversal, massive. And I did miss the short at the 38% retracement. I missed that. That is key resistance. I'm going to write down 75 cents. All right, it is key. Like this is we talk about like a sell zone for the Aussie. It's right there. That right there is a sell zone. Okay. So 75 cents is key. Now, should we get up there, I would actually take a stab on the short side. Okay. Now support. Okay. So imagine this being a huge flag. Looks like this, right? Okay. So now support should be at 74.25. Dollar yen's trying to roll over a little bit. It's because bonds are bouncing. Bonds rallying, yields are falling, dollar yen's, coming under a little bit of pressure, but the dollar is actually holding up pretty damn well, despite this move in bonds. All right, let's take a look at the dollar index. Here's your dollar index. So, filled the gap completely. Came to previous support, current resistance. Let's go get rid of this. This is old stuff from last week. Okay. Okay. Oops. So previous support, current resistance. You go from high to low. This is 618 right there. So you can see why we're stalling where we're stalling. So I'm going to write down 101.60 as resistance. 101.60 is resistance. Now support is easy. It's 100.50, which is right here, which if you don't know why that's such big support, because that is our massive breakout zone, okay? We came pretty damn close today. I mean, today, overnight we went as low as 100.64. So just remember, 100.50, this is massive support. That's why I'll put a bunch of asterisks there, because as long as the dollar remains above 100.50, it is bullish. If you're shorting the dollar right now, like I'm shorting a little dollars right now, it's counter trend. You know you're going counter trend, all right? But while we're above that 100.50, it is bullish, the dollar index. Make no mistake here, all right? Let's go over to the peso. Now, I still have a short in the US dollar Mexican peso from last week at 2068. Sorry, I've been short this thing for like days, almost like a week. I still think we're in this range. So we're in this range between 2078 to 2027. 2027, 2078. And it's still bullish. Okay. And it's as long as we remain above 20, it's still bullish. I mean, we have to drop below 20 for that to change. Or 1990 or whatever the price is. Okay. All right. US dollar Norwegian krona. So nothing's changed since last week. We broke above this trendline resistance. Remember that from last week. We broke above that trendline resistance. We're stalling at resistance here, like horizontal resistance. And this is support. Here, let's we can actually keep that fib. There's a 618. So let's grab this and say, while we're above 847, it's very well supported. Resistance at 860. Oh, we did spike up to 864, but $847 is support. Resistance is 864. And it's bullish because we're above that trend line. Okay, let's go over to the US dollar Swedish krona. Okay. Here's your US dollar Swedish krona. Now, we've been consolidating pretty well. Remember, previous to this, here, let's get rid of that. We don't need that right now. We don't need that. We don't need that. We don't need that. And we don't need that. Okay. Previous to this weekend, remember last week, we just kept running up against the underside of this trend line. Finally stopped, and now we're backtracking a little bit. The US dollar Swedish krona has, I mean, it's still extremely bullish. The pullbacks have been very minimal. And even last week, we ended up hitting new trend highs, which to me is pretty amazing. Okay. I couldn't believe we hit new trend highs. Now, any pullback right now to 910 is going to be very well supported right through there. You can see that's just around the 50% retracement of the, you could actually do this. There's a breakout point there, right? So from low to high, 50% retracement comes in at 909. So while I'll remain above 909, it's bullish. All right. Resistance is at 931. And it's bullish. Okay, so your bias chart is finished. Grab my coffee really quick.